Hello everyone, welcome to Akira's Academy of Accounting and Finance. Now let's discuss about the treatment of goodwill, how we will give the effect of goodwill into the books. Okay, now we know what is goodwill, right? It's the name and reputation which the firm has earned. Okay, so goodwill, as discussed earlier, there are two kinds. One is purchased goodwill and another one is self generated goodwill. Okay, purchased goodwill, when one organization purchase another organization and for that organization they are paying a goodwill amount for that organization, so that is a purchased goodwill. Okay, that purchased goodwill only you can show it in the books. Okay, purchased goodwill will only be shown in the books as an intangible asset. When I talk about self-generated goodwill, here when we are talking about the admission of a partner, they are generating the value of the firm, and based on that they are asking the new partner to bring his share of premium of goodwill. Okay, because they know that their firm is having good reputation and they are sacrificing their part of profit and giving it to the new partner. Okay, so they ask the new partner, like, this firm is having this much amount of goodwill, bring your share of goodwill. So that is a self-generated goodwill which will not be shown in the books. So when a new partner, there is an admission of a partner, so when a new partner enters into the business, what he brings his capital amount along with premium of goodwill. Okay, premium of goodwill. Okay, his share of premium, like if we've calculated, right, the methods of calculating, average methods, the super profit method, capitalization method. On the base of that we calculated the value of goodwill. Let's say the value of goodwill is 1 lakh. Okay, value of goodwill, the firm's value of goodwill is 1 lakh, and the new partner's share in that particular firm is 1/4. So how much of the goodwill amount he will bring? 1/4 of 40,000, that is 25,000 rupees he will bring as his share of goodwill as a premium amount, right? So how we will give the effects? There are we will study 4 ways. The first way is he will pay the goodwill amount directly. He paid the goodwill directly to the old partner outside the firm. Okay, outside the firm he gave him the goodwill amount, so then there is no entry, there won't be any entry in the books. Okay, the next is he pays the goodwill amount, pays the goodwill through the firm. Okay, when he brings in the capital amount, he brings in the goodwill amount, the premium for goodwill amount. Okay, so when he brings in the goodwill amount, what will be the effect? The first, how we will record them, how we'll give it the effect to it in the books. The first, what he is bringing cash or bank. Okay, he may bring cash or bank, he may bring any kind of a asset. Okay, that is what the new partner brings into the business. So that comes into the business, cash or bank account, asset account. Okay, this is the capital amount. Along with that he brings in the goodwill amount. Likewise he brings in the capital of 50,000, not 50,000, let's say 1,50,000, and he brings in 25,000 as his premium of goodwill. So in total how much he brings in? He brings in 1,75,000 as cash, let's say. So what will be the effect? Cash or bank account debit that comes into the business. So 1,75,000. How much goodwill? How much is his capital amount? Let's say to C's capital account is 1,50,000. And what is this 25,000? This 25,000 is the premium of goodwill account. This is premium of goodwill account. So this is the one way, this is the first entry when he brings in the goodwill amount in the form of cash into the business. Okay, Now this, what the old partner says, the old partner says we are sacrificing our profit, right? So you have to bring in the goodwill amount, your share of goodwill amount, and that share of goodwill will be distributed among whose? Among the sacrificing partners, among the old partners, existing partners, in their sacrificing ratio. We studied old ratio, then there was a new ratio. When a new partner comes into the business, they determine the new ratio, and when we deduct old ratio minus new ratio, we get the sacrificing ratio. Sacrificing ratio is what? Is something what the existing partner sacrificed their part of profit. They sacrificed their part of profit, so they did, from old ratio they'll deduct their new ratio, and then they'll get how much they have sacrificed it. So this premium of goodwill will be distributed between the existing, the old partners, in their sacrificing ratio. Okay, so the second entry would be what? This premium of goodwill, if will be given to the existing partner, premium of goodwill account debit, we close this account, 25,000 to the old partners sacrificing ratio. This will be distributed between the existing partner, the old partners, in their sacrificing ratio. Okay, now if they want to retain this amount, if they want to keep that amount, 25,000 of the cash what the new partner has bring in, this will be the only entry. Okay, when they want to retain it, retain this. Okay, second is when they want to withdraw that amount from the business. Okay, the new partner has bring in the premium amount, they say we want this premium amount, so they want to withdraw that amount. So what will be the effect here? They withdraw full amount, withdraw the full amount. So what will be the effect? What will be the entry? Old partners sacrificing ratio. Okay, account debit 25,000 to the cash. The cash or bank check went out of the business, so cash reduces, so to cash or bank account 25,000. Okay, now that could be the case they don't want to withdraw the whole amount. Let's say they want to withdraw partial amount, withdraw partial amount. When they want to withdraw partial amount, what will be the entry? This is the third situation. What will be, will be the third entry. The first two entries will remain the same. Okay, when they want to withdraw, this will be the third entry, and when they want to withdraw the partial amount, then this will be the third entry. Let's say they want to withdraw 10,000 only. Okay, they want to retain 15,000, just 10,000 they want to withdraw. So old partners capital, this is not sacrificing ratio, their capital account will debit. Okay, capital account debit to cash or bank account 10,000. They are withdrawing just 10,000. Okay, this is easy. If they want to retain that amount in the business, their just capital account will get increased, their capital account will get credited, and cash and bank account will get debited. They are not withdrawing the amount. If they are withdrawing the amount, then their capital account will reduce, capital amount will reduce, capital account will get debited, and the cash and bank account will get credited. If they are withdrawing the partial amount, then that partial amount will only go out from the business. Okay, so partner's capital account debit to cash or bank account. This could be the situation when the new partner brings in cash in the form of goodwill, brings in goodwill in the form of cash. Okay, what happened, it's not necessary that he brings in goodwill. Okay, sometimes he does not bring goodwill. If he does not bring goodwill, what could be the case? if he does not bring goodwill, first is he brings in the capital amount 1,50,000. So the first entry would be cash or bank, or if he is bringing asset account debit 1,50,000 to seize capital account 1,50,000. But let's say this 25,000, this is the goodwill amount, this he doesn't bring into the business. So now this is what his share, okay, he needs to pay, but he doesn't bring his, he was not having this amount. What will be the second entry? First, this is the what we will do, seize current account. We will open seize current account. Okay, whenever the firm will earn the profit, his current account, he won't get the profit. Okay, that will be debited from his current account. So when he doesn't bring it, we will debit his current account, we will reduce this current account. So seize current account debit 25,000 to premium of goodwill account 25,000. The firm, the partners are going to get this 25,000, but when the firm will earn the profit, that profit he won't get, that profit will be deducted from his current account, right? And then this premium of goodwill will be distributed between the partners in their sacrificing ratio. Premium of goodwill account debit 25,000 to old partners capital account. This will be distributed in sacrificing ratio among the old partners, 25,000. Okay, this is the situation. There could be a case wherein he brings the partial amount, he was not able to bring the full amount, he was able to bring the partial amount. Let's say he brings in 10,000 only. So second effect will be cash account debit. He brings in 10,000 only, 15,000 he couldn't bring, so only his current account will be debited by 15,000. So these could be the situation. One, he brings in the capital, he directly gives the goodwill to the partner outside the firm, so there will be no entry. Secondly, he brings in the goodwill into the firm. That firm, if the partners want to retain that goodwill in the business, so they will retain it. There will be two entries. One is cash account debit to seize capital account to premium of goodwill account. That premium of goodwill account will be credited to partners capital account in their sacrificing ratio, mind it, this is sacrificing ratio. In that ratio, that will be distributed between the old partners. If the old partner withdraws the full amount of the cash or bank is going out from the business and the partners are going to receive that amount, their capital amount will reduce, so capital account will debit it to cash or bank account. If they withdraw partially, then partial amount will be debited to cash or bank account. Okay, the third situation, he doesn't bring the goodwill. If he doesn't bring the goodwill, we will open the current account of the new partner. This current account, as and when he will get the profit, that profit will get reduced from his current account, right? So seize current account debit to premium of goodwill account. Premium of goodwill will be distributed to the existing partners, old partners, in their sacrificing ratio. Now this is the case when the new partner he enters into the business and he brings the goodwill amount. Now it may so happen that there is already a purchased goodwill. There is already a purchased goodwill which exists in the books. This is already there in the books. Okay, so this goodwill needs to get closed as per accounting standard 26. Okay, whenever there is a reconstitution or reformation, whatever is the old goodwill amount, you need to close it. Okay, then and then only you can carry it forward. Moreover, you need to write off the goodwill amount in the 10 years. Okay, so now this there's already goodwill which exists in the books. We need to close that goodwill. Okay, that goodwill will be distributed between whom? Will be distributed between the old partners. It was before the admission of the new partner, so this goodwill was before the admission of a new partner, so that goodwill still exists. We need to close that goodwill be distributed between the old partners and goodwill account, old partners account debit to goodwill account. Okay, let's say previous goodwill was 5,000, so this 5,000 will get closed. Now old partners account, how it will be distributed between old partners? In their old profit sharing ratio, because it was before the admission of a new partner. So whatever is being there before the admission of a new partner, whatever we need to distribute it between the two partners, it will be in their old profit sharing ratio only. So this goodwill account we will close and we will transfer it to the old partners capital account in the old profit sharing ratio. This you need to remember, this will be distributed, this goodwill will be distributed between the old partners in their old profit sharing ratio. But when a new partner brings into the premium amount of goodwill in the business, that premium amount will be distributed between the two partners in their sacrificing ratio, because they are giving their part of profit to the new partner. Okay, so they are sacrificing, so whatever premium he is bringing into the business, that premium will be distributed between the old partners in their sacrificing ratio. Understood these things? The third thing is, the fourth thing could be, there could be a hidden goodwill. Hidden goodwill, it is not there, like in your question it is not being mentioned what is the amount of goodwill. Okay, now let's say there are two partners A and B. Their capital amount is 50,000 and 30,000. Okay, now C enters into the business and he brings it how much? He brings it, let's say 60,000. Okay, and how much profit he is sharing? He is sharing 1/4. His share of profit is 1/4. Okay, now we don't know, we need to find out the goodwill amount. We don't know what is the goodwill amount in this case, so we will do the reverse way. Okay, now 60,000, he is sharing how much profit? 1/4 share he is receiving as a part of a profit. So 60,000 if he brings in as a capital. Okay, so we'll do a reverse, that is 4/1. How much? Like 60,000 is 1/4, so the full amount is how much? It will be 2,40,000. This should be the capital amount of the business. Capital amount of the business, if he is bringing 60,000, that is 1/4. So what will be the whole amount? It should be 2,40,000, right? But when we calculate their capital amount, how much is the total capital? 5, 6, 7, 8, 8 plus 6, 1,40,000. How much is the total capital? 1,40,000. But when we calculate the amount invested by the partners and by a new partner, and he is receiving 1/4 share of the profit, so there is something like, we try to find out if his share is 1/4 and he is bringing 60,000, so what will be the full capital amount? It should be 2,40,000. But what is actually the capital amount? It is 1,40,000 of all the three partners. So when we deduct this is first, this is second. Okay, 1 minus 2, 1 minus 2, that is 1,40,000. What we will get? 1 lakh. Okay, this is what? This is hidden goodwill. This is the hidden goodwill amount, right? And this hidden goodwill, how much premium he needs to bring? He didn't bring the premium amount. How much premium he needs to bring? So 1 lakh, 1/4 of 1 lakh. His share is 1/4. Okay, so he will bring 1/4 of his premium amount. So that is 25,000. And the journal entries will be the same, right? Journal entries will be the same for hidden goodwill. The first will be he brings in the cash account debit. How much he brings in? 60,000. 60,000 to seize capital account, 60,000, right? Then there is this premium of goodwill amount which he doesn't bring into the business. Okay, if he doesn't bring into the business, what we will do, we will open seize current account, seize current account debit. How much it is? 1/4, 25,000 to premium of goodwill account, 25,000. And the third entry would be this premium of goodwill belongs to whom? To the existing partner. Premium of goodwill account debit 25,000 to old partners capital account 25,000. This 25,000 will be distributed between A and B in their sacrificing ratio. That is why it is important for you to practice how to find out the new ratio, how to find out the sacrificing ratio. Okay, so this is what is all about goodwill. I hope you got till this much. I want you to practice these methods of goodwill. Find out what is the old ratio, find out what is the new ratio, find out what is the sacrificing ratio, and how you will give effects of this goodwill in the books. Just need to understand, when a new partner brings in the premium amount of goodwill, okay, he brings in the premium, that premium will be shared between the existing old partners in their sacrificing ratio. And if the goodwill already exists in the book, that goodwill first you need to close it. Okay, close this goodwill account. This goodwill will be transferred to the old partners capital account, and that will be distributed between the two partners, or the whatever the partner, how many partners are there in their old profit sharing ratio, not as per the new ratio, not as per the sacrificing ratio, as per the old profit sharing ratio. I hope you got till this much. See you in the next video. Thank you very much.